Hey everyone, and welcome to the Tesla Stock Podcast. It's a pivotal week for Tesla, with political drama making headlines once again, and all eyes turning to the company's crucial delivery numbers. With the stock currently trading around the $304 mark, there's a lot for us to unpack today. So, let's get right into it. Our first big story is one that investors hoped was in the rearview mirror. Another high-profile political battle involving Elon Musk and President Donald Trump. Over the weekend, Elon took to his social media platform, X, to heavily criticize a major spending bill making its way through Congress. He called the bill utterly insane and destructive, and warned that any member of Congress who voted for it would lose their primary, saying it's the last thing he'll do on Earth if he has to. Now, initially, the market reaction was pretty muted. Unlike a previous online spat in early June that sent the stock tumbling and wiped out billions in market value, this time Wall Street seemed to shrug it off. It looked like Elon was being more specific in his criticism of the bill itself, rather than making it personal. But that calm didn't last long. President Trump responded directly on Truth Social, threatening to have the Department of Government Efficiency, which Elon used to run, take a good hard look at the subsidies for Musk's companies. He also reiterated that he was strongly against the EV mandate. That threat was enough to spook investors, sending Tesla shares down about 4% in pre-market trading. This is the exact kind of headline risk that makes holding Tesla such a roller coaster. The last time this feud got personal, the stock plunged 14% in a single day. Personally, I think this shows that while the long-term story is about tech and execution, the short-term price is still highly sensitive to the CEO's political entanglements. It's a variable that just doesn't exist for most other automakers. Now, this political storm couldn't have come at a worse time, which brings us to our second major headline: the upcoming second quarter delivery numbers. And by all accounts, we should be bracing for a disappointing report. Even the most bullish analysts are sounding the alarm. Canaccord analyst George Gianarikas, who has been a longtime Tesla bull, just slashed his Q2 delivery forecast from over 432,000 down to around 360,000. He noted that sales are tracking poorly in many regions, especially Europe. Similarly, RBC Capital Markets is predicting a number around 366,000, which is well below the consensus estimate of about 406,000. This is a big deal because investors were hoping to see a recovery in sales now that Elon has stepped away from his government duties to refocus on the company full-time. A weak delivery number would suggest that the challenges in the core automotive business run deeper. As Gianarikas put it, they need to see growth in the core business to drive material positive earnings revisions. For now, and for the foreseeable future, car sales are what pay the bills at Tesla. So, with political headwinds and a potentially ugly delivery report, why isn't the stock in a complete free fall? That brings us to our final topic, the Robotaxi. For the bulls, the narrative is shifting. They argue that short-term delivery numbers are just noise. The real story, the one that justifies Tesla's massive valuation, is the rollout of its autonomous Robotaxi network. As the firm Deepwater Capital Management wrote, all that matters for shares of TSLA over the next 6 months is the pace of the Robotaxi rollout. Despite lowering his delivery forecast, that same Canaccord analyst called the initial Robotaxi launch a success. He acknowledges its current limitations, like the need for a safety driver and being geo-fenced to a specific area. But he's focused on the bigger picture. Tesla has deployed a driverless car that relies only on cameras and AI, not expensive LiDAR. The key challenge is scaling this technology safely and reliably across the country. But if they can pull it off, the potential is staggering. The analyst estimates Tesla's cost per mile could be around $1.9, potentially dropping to $1.97 with the future Cybercab. Compare that to Uber and Lyft, which operate at over $300 per mile. With a simple software update, Tesla could theoretically turn millions of its cars already on the road into revenue-generating assets, completely reshaping the ride-sharing industry. This is the fundamental tension for investors right now. William Blair's analysts summed it up perfectly. They see a challenging environment for the core businesses today, but believe the launch of Robotaxi keeps momentum at Tesla's back. It's a classic battle between today's reality and tomorrow's promise. So to recap, we have a renewed political war of words creating headline risk, widespread expectations for a weak Q2 delivery report, and the massive long-term promise of the Robotaxi network acting as the primary bull case. It's a critical moment for the company and the stock. So I want to leave you with a question. What do you think will have a bigger impact on Tesla's stock over the rest of this year, the core EV delivery numbers, or the progress and updates on the Robotaxi rollout? Let me know your thoughts down in the comments section below. I read every single one. And as always, if you got value from this breakdown, please hit that like button, subscribe to the Tesla Stock Podcast, and turn on notifications so you don't miss our next update. Thanks for listening, and we'll see you next time.